let you start. If you can please just introduce yourself and go forward after. Thanks.
Okay. Well, first of all, good evening, everybody. It's a pleasure to meet you. And Bryce, if you would also unmute Mike Yosher, that would be great. He's also going to be. He is actually the founder of the opportunity that I want to share tonight. My name is Noel Walrand, aka Coach Noel, and for the last uh, 10 years, I've been a performance coach, coaching people on how to monetize their passions, beat procrastination, and increase their incomes. I was sort of introduced to the world of finance and real estate through a friend of mine who taught me how to build intergenerational wealth using real estate as a vehicle. And one of the things that has become quite apparent is that if you want to truly build intergenerational wealth, it's one of those models that you definitely need to look at. And I got into the world of private lending through that space. And private lending is a very powerful thing because it's a space in which people can actually earn secured returns and substantial returns at that. And so, in speaking with Richard, he invited me to come out and talk a little bit about what is private lending for those people who are looking at it, and why. Why is it a good time to do it, and particularly through the vehicle that we have that I have to offer for people. And particularly right now for everybody who on this call who is a homeowner that has equity in their homes and you want to be able to protect yourself against what's coming, this is going to be something that you definitely want to hear. And for people who maybe have not participated in this space before or had thought about and they're working towards building up themselves so they can participate in this type of space, that they can do that. So tonight I'm going to be talking a little bit about this company called Flex Home Loans, which offers a turnkey method for people to get involved or engaged with private lending. And Mike Yosher, who is actually the principal of the company, is here with me here tonight as well, who can also answer questions when we get to the question portion, everything like that. He is a financial wizard, and he's done exceptionally well both in Canada and the United States. And it's something where, so between both of us, we will go through it and we'll also answer any questions that people have. So if you have a notepad and pen, you definitely want to take that out. So we're about to get into it. Am I able to share my screen?
Yes.
Okay. Okay.
Guys, if you have any questions too, you can write them in the chat for Noel.
Yeah,
you can take a time to.
Okay, so how do I do the screen share? How do I do that?
Do you see at the bottom right there is present now?
Oh, present now. Okay.
Normally, Noel is the Zoom master, and now
I'm not used to. This is my first time using Google Chats or the Google thing. I've never used it before, so I'm like, oh, okay, this is different. One second here. So I got the slides up there. So I go to present now,
and then you can pick
show your entire screen. Or show, where do I click it? Should I show a window or show it's a tab or a screen? What should I guess a screen, right?
Yeah, if you want, you can show your screen. If it's fine with you, you can show your entire screen.
Okay, so are you guys seeing the screen or no?
No, I don't see anything.
Oh, there we go. So now there we go. So how do I open up to, okay, so maybe I should have done share a window. Sorry guys, I've never used this before. I'm the Zoom guy. Okay, one second. Let me try this again. So maybe I should do share a window instead of full screen.
Yeah, if you can, it's gonna share a tab on your browser.
Okay, because what I need is actually on the lower part. It's not in a browser. It's an actual PowerPoint presentation that's on my desktop. So how would I find that?
Okay, so yeah, share your screen then.
Okay, share the screen. Okay, I'll let you walk me through this, bro. So, all right. So share screen. Now I know how you feel, Mike. So I'll go to share screen. Okay, is it sharing now, or I click on, okay, there I go. I click on that to share.
Yeah, that's good now.
Okay, and then now I want to, okay, so let me see if I go to pull this up right now. Are you guys seeing something on
Yeah,
the,
yeah,
Yeah.
yeah.
okay, that's interesting because I can't see anybody or what anybody's maybe typing in the chat. Okay, so I guess you'll keep track of the chat. I guess if people have questions, this is okay.
Yeah.
So you're seeing Flex Home Loans across the screen.
Yes.
Okay, and are you still seeing my face, or you're just seeing the screen?
We see your face too.
Oh, okay, interesting. Okay, all right. So, um, um, so let's get right into it because I know we're on a time constraint here. So for those people who aren't familiar with, first of all, private lending is, it's about lending out your money to a private individual. You're a private person lending your money to somebody, but in this particular instance, it's secured. So Flex Home Loans is a company that specializes in offering microfinancing or small loans to homeowners for home improvement solutions. So just as an example, let's just say you were doing renovations at your house, and you're speaking with so you have the contractor comes in and you tell them everything you want, and then they give you a quote, and then they tell you, well, you can either take care of it by paying it for cash, or you can we have a financing package for you, right? And so that financing that's offered, so that everything from the don't pay a cent event to Leon's and all of those things are provided by third party private lenders. And so in this particular instance, in this particular instance, FHL is the preferred financial institution for home improvement companies that want to extend financing to their clients. And when Mike and I had spoken before, because I had been involved with doing some private lending stuff before, and one of the biggest challenges is that the loan to values, which I'll get into in a minute. But bottom line is that having enough cushion there in the event that there's a correction in the marketplace. And he showed me that using this type of a vehicle, we have all types of cushion, and it's a way that investors can participate in private lending without having to deal with the end user. So it's all a turnkey while they get to enjoy secure to medium to long-term returns. So I'll let Mike, I've known him for about 10 years, and I'll let Mike actually speak to himself and in terms of his background. Go ahead, Mike.
Sure. Thanks, Noel. And Bryce, thanks for having me here. So a little bit about myself. I started out with the banks. I was with Scotia and CIBC for a number of years. And I guess once I got to learn the institutional policies and how the banks lend out their money, and the collar got tight, I guess, went into the independent space and got into private lending. As a private lender, I've always lent out my own funds as well as families and close associates. And I've done everything from, small 50K loans to $15-20 million land syndication and construction with developers, right? Currently, my model is really focused on these micro mortgages because what we do is we essentially are diversified across multiple properties and multiple borrowers. So, typically in private lending, for those that have done it, if you're lending out, say, $100,000 or $200,000, you're giving it to one owner and one property, right? Versus in this model, it's essentially going to be $100,000, $200,000 across multiple properties and multiple borrowers, right? Still with the same security, but now your dollars go further, so that if there is any kind of default, there's things to to be balanced out, and you still have recourse to be able to recoup your investments.
Yes. Sorry, Mike, am I cutting you?
No, that's it. I was just going to say I've never lost a penny, private lending, but that's fine.
Yes. And one of the key things to get, and one of the reasons that right now is an ideal time to start looking at your equity, and whether you participate with us or not, something that you may want to consider is that they're calling for house prices to drop anywhere between 10 to 18% over the course of the next 2 years. And so if that's the case and that were to happen, then, right now we are losing you're losing the value to be able to utilize from your home. So if your house is $800,000 and it dropped even just 10%, that's $80,000. And that you no longer have use of to be able to put to work. And, so that's one reason that I think it's important to take out to take out what you have inside the house. The other thing is, right now, because in Canada, the amount of money printing that's taking place with the Bank of Canada, it is the Bank of Canada is underwriting a lot of this whole just through the pandemic, everything from the CERB side to subsidizing banks who are doing the deferral payments right now, because a lot of people, I think there's over 500,000 homeowners right now on mortgage deferral. There's a lot of money being printed, and the more money that gets printed, the less the value of our dollar. So our dollar is being debased, and it's being debased at a very rapid rate. And so if there's ever been a time to make certain that your money is going to work, it's immediately. And from my perspective. And so that's another reason that you want to put that money to work. Like this, you have to be able to outpace inflation. You know what I mean? Like the cost of or the value degradation of our dollar. We have to make our dollars work harder than the degradation that's actually taking place, so we can outpace inflation. So that's reason number two. Another thing is that, a lot of us have been taught, my mom's from Trinidad, my dad's from Guyana. And, one of the things that I, had been schooled at was that, you want to pay off your house. And, I want no mortgage, I want to pay off the house. But that's not how the banks actually do business. The banks don't like having a bunch of cash sitting. They always want their money on the street. In fact, because of the fact that we deal with fractional reserve banking right now, that means whenever we put our money on deposit, the banks are only required to maintain a certain. When we put our money on deposit, the banks are only holding on to a certain percentage of that. The rest they are lending out, and sometimes they're leveraging it 10, 15, and 20 times. You know what I mean? So because they don't want their money sitting. So we want our money to sit. The bank doesn't want their money to sit. They want it on the street. And so the whole idea is that when you take those funds, because a lot of people I know are afraid sometimes, I don't want to touch this method. First of all, you're already losing value on it from a purchasing power standpoint. Period. Just based on inflation, it's a slow bleed, but you're still bleeding. And number two, again, because of what's potentially going to be happening with our marketplace in terms of market drop, some people say, but what if the market doesn't drop? Great, then you can use more. If the market continues to go up, then you can take out from the property, and you'll have more to be able to utilize to get going. The whole point is that you're supposed to use those funds to create more money for you. We don't take it to go to Vegas. We take it so that we can put ourselves in a situation where we can retire ourselves earlier. When I say retire yourself, that simply means earning passive income through our investments that covers all of our bills. And everybody who has a job, who has a pension, part of what those pensions are invested in is real estate, private lending, and Forex. Those are all areas that the banks participate in, that our monies are already being invested in, but we just don't necessarily individually participate in those. So again, another reason why to look at it. So let's look more at specifically this particular model of private lending. You want to go ahead?
Sure. So essentially, clients basically seek financing for the home improvement projects. You can go on to the next slide. Generally, the loans are anywhere between $15,000 and $25,000, so we keep them quite small, and they are secured by a mortgage charge on the property. Why that's very important, the distinction between a charge and a lien, whether you knew there was a difference or not, is that a mortgage charge is basically the same type of charge that the banks have over a home, and basically allows you to go through a power of sale proceeding if it was a default. Versus if you have a lien on the home, you'd have to get an execution, and then it kind of sits there, and you basically have to wait until the house sells or the refinance to get your house. Not in our case. Here, if there's a default, we can take them through a power sale process. So we have recourse, and that makes a huge difference in terms of, you know, collectability and being able to collect.
Yes, and you want to cover this?
Yeah, and the final point that's, you know, quite important in our process, we go through a recorded video call with the client, with the paralegal. We go through 2 recorded phone calls. We get them to confirm the terms and whatnot. But the most important thing is the second verification call, which is that last bullet point there. Once the job is complete by the merchant, we make sure that they are the client is satisfied. We call them, we say, you know, was this installed? Was that installed? Was that installed? Did you inspect it all? Are you happy with it? Okay, great. Because once you confirm to us that you're happy, we're going to advance the funds to the merchant. Then it's your obligation to pay, you know, and that basically gets recorded on the calls. And we make sure that the client is indeed satisfied with what they've gotten, so that there's no disputes with that type of thing later on. So our process is quite tight in terms of the underwriting. We make sure that everything that we cover in writing and on paper, we also confirm verbally through video and through the phone, through recorded calls.
Yes. So as an investor, a couple of things that you're going to receive are the automatic electric valuation, or purview, or geo warehouse. So that's how we get a sense of the actual value of the property that we're looking at in that area. You get a copy of the purview, you get a copy of the ID verification done by the paralegal. You want to go into title search and writ search, Mike?
Yeah, of course. So we do a ID verification, as I mentioned, by the paralegal. We also pull a typical title search on the property to see what liens are currently registered against the property. We also do what's called a writ search and execution search against the borrower to see if there's any kind of judgments against their name. So these are all things that essentially are liened against the property or the equity ownership that's in there. So we make sure that we have those covered. You get obviously the package of the signed mortgage documents. And the most important thing, and this step is done by your lawyer at the end of the transaction, is that there's a transfer of ownership charge from my company name into investor's company name. So this isn't like you're investing in a mortgage pool or a mortgage fund. It's not like I hold on to this and I say, hey, trust me, and we sign a trust agreement. Like, none of that. It's a direct transfer of charge ownership from my company name into your company name, right? And then how we continue to benefit as a company is that I continue to administer the loan, and that's actually in the next slide. So we do all the interfacing with the client in terms of, you know, collection, enforcement, and so on. And I may have jumped ahead here. So
you jumped a little bit ahead of me, Mike, but it's all good. Yeah. So the general criterion, and this is something that's really, really key, and anybody on the call here who has participated in private lending will know what we're talking about. So Flex Home Loans typically lends based on a 50 to 60% loan to value. And frankly, a lot of them really are between 40 and 50% loan to value. But for those people who don't understand what that means, let's break that down. So let's just say there was a house valued at $600,000, right? And the mortgage balance, or the amount owing on the house, was $300,000. Well, the difference obviously is $300,000, right? You have $300,000 in the house in equity, right? So, and if the loan amount is only $30,000 that we're issuing, that means that there's a lot of equity to protect against that $30,000. You know what I mean? So that equals a 55% loan to value level, and it provides a ton of security for the investor, for the lender. Okay. And so that's really, really big. The loan to value is huge. And another thing that I think is great is that the loan terms are for 5 years and they're interest only. So the investor, you know how much you're earning on your investment for sure over the course of the next 5 years. Because so you know exactly what it is, you know how much you're getting, period. So I think it gives you a nice medium-term investment time frame to enjoy those returns. Are there any questions that have come up in the chat, by the way? How are we doing? Because I can't see anything. All I'm seeing is the screen.
No question.
Okay, so So let's just, one of the biggest things, it's not about how much money can I make, but please don't, I don't want to lose my money, right? So, well, based on a 60% loan to value, which is the highest we'd ever go, the market would have to drop over 35% in order for your principal to be impacted by a value drop. So the real estate market would have to drop by over 35%. And that's not losing all of your money, that's just impacting the principal. So they're calling for anywhere between a 10 to 18% drop in the market. That's nowhere close to 35. I mean, so market drop 35%, we got real big problems. You know what I mean? Just in general, you know. So that's something that's pretty, because again, this is just showing you again layers of security. So mortgage charge, there is a protection. The loan to value, there is a protection. So you've got plenty of cushion in between, and so we've got a lot of protection there. So exit options. So if the investor can choose to renew or withdraw at the end of 5 years, but let's just say, for example, let's just say, for example, the borrower wanted to go longer with this loan beyond the 5 years. And so, well, within 90 days of that, there would be a conversation with you, and you could determine if you want out or if you want to just continue letting them pay you. You know what I mean? So, but if you want out, no problem. Within 90 days, we would have another borrower, another lender in your place, and we take it over. You know what I mean? And you're out and you're exited. What recourse does the investor have if the customer defaults on the loan? So, Mike, this is what you're talking about. So you can go ahead.
Yeah, so we essentially are the front facing with the borrowers. We collect a pre-authorized debit agreement along with their void check. So we are the ones that collect the monthly payments, and then we remit the monthly payment to the investor. So we also take care of enforcement. Now, one of the things that I put in all my transfer agreements is that if there is a default, I have the right to purchase back the loan at full price to the investor with full interest paid. And the reason is because I believe that when it comes to defaults, there's a certain way, to handle them. And private lenders can sometimes become a little too aggressive, right? And so we're conscious of that, and I want to protect, my reputation, my company's reputation, right? So I always put that clause in of the right to purchase it back, because I go through a process with the borrower. First, we make sure that we can try to refinance with the bank. If that doesn't work, there's an alternate institution like a trust company that we can go to, or a credit union. And if that doesn't work, then we can still go to a private loan to replace, because we have a lot of equity in the home for the most part. And if none of those options work, or for whatever reason the borrower is uncooperative, then we will go to a power of sale situation as a last resort. But again, that's something that I have only done in my entire career twice. And one time it was because the guy literally dropped dead of a heart attack while, building his house, and, we had no choice. But otherwise, it's not something that I like to resort to as a first option.
Okay, awesome. So the next thing here, she says, okay, the investor returns. Okay, so minimum investment is approximately $100,000. Which would be spread out over multiple properties, likely 3 to 4 properties. The number is an approximation because the loan amount is going to vary, right? Because the loans could be 20,000, 15,000, whatever the number happens to be. So it's an approximate, but 100 grand is the minimum. The returns range from 8 to 10% per year, depending on the investment level. So each deal is going to vary. As a general rule, typically, for people participating with $100,000 to $500,000, that would be at 8%, and then 500 to like a million would be like 9%, and if you went over $1 million, then it'd be over 10%. So that's the rate of return. If you're using registered funds, which you can use, you can self-direct RSPs, LIRAs, and RESPs. You can self-direct those into this. Olympia Trust is one of the companies that's used to do that. If you want information on that, again, I'll have at the end of the presentation, I'll have my contact information. You can just shoot me a message and we can walk you through and guide you through it. And as well, if you are a person who is a homeowner and you're looking at, because most people are utilizing either money that they have sitting in their house or money that's sitting in a registered fund like their RSP or the LIRAs and that type of thing. And so we have people that can help you to get those things done, or if you have your own people, great. And but that's usually where people get it from. If you got a couple $100 grand just sitting in your house, well, okay. So the returns. So on the minimum side, at 8% return, 100,000 works out to being $666 a month. 200K works out to $1,332 per month, and 300,000 works out to about just under $2,000 a month. So that's a very nice passive with a secured rate of return. Like it's a passive secured rate of return. It's kind of like having properties that you own, so to speak, but you don't have to manage them because Mike's company does the administration. He handles all dealing with the customers, but you don't have the headaches of being a homeowner, but having, but having the nice passive income that comes through that space. So it's a beautiful thing. It's a beautiful, beautiful thing. And there's some people on this call who may have multiple properties and can't put other properties under the names. This is a great additional place that you can utilize and put funds, and people from anywhere in the world can participate with this. If you've got friends, family from anywhere in the world, they can participate in the private lending. So it's a beautiful thing. So how do you get paid? Well, there's something called this is prepaid for the initial 12, 15, or 18 months. So how does that work? When the contractor goes into the house and they're talking with the homeowner and they're saying, hey, look, we have a financing option where you don't have to pay a cent for the first 12 months or 15 months or 18 months. What actually happens is that once they have agreed that the work has been done properly, and everything is signed off on, the funds are given to the home improvement company less the 12, 15, or 18 months worth of interest up front. So they're getting paid, but we get our money up front. You know what I mean? Like this for the first year or 12. So you're going to get either 12 months worth of interest, 15 months, or 18 months worth of interest up front. So on 100 grand, you're getting call it $8,000 up front on closing with your attorney. So on closing, through direction, your attorney would give you that. If you're doing $1 million, it may be $100,000 that you're getting on closing. And this is one of the most powerful things, I think, too, because what I have suggested to people is that with the money that they get up front in cash that first year, invest it in gold, silver, you know what I mean? Invest it elsewhere so that now you're beginning to compound your returns, which is really good. So, there's a number of different asset vehicles and investments that people can participate in. So that is something that people look at, so that first set of cash, take it and go and get that money to continue to work harder for you, another generation of cash working for you. So your residuals, your monthly checks, deposits start coming to you after the following month after the deferral period. So after 12 months or 15 months or 18 months, you would start getting now the monthly deposits into your account. Mike, I'll let you speak to this.
Sure. So we basically administer the monthly distribution through direct deposit to our investors. So essentially, as the monthly payment gets collected into our account, it then within 5 business days gets sent, the portion that's owed to the investor directly deposited to your account. And basically, in order to receive the monthly payments past the deferral period, we then enter into what's called an administration agreement, where essentially I administer the loan on behalf of you, the investor.
Okay.
So there's a question here from Harry. In terms of tax, how does it work? Well, the main thing is, check with your accountant, but it is interest income. So speak with your accountant at what bracket that works out for you. It depends on your individual tax bracket.
Right. And what some people have opted to do as well, Harry, is if they have room in their TFSA, they can put their returns inside there, I guess until they're ready to disperse into something else. So can the investor get their money out before the 5-year term? Well, the loan term is expected to be a 5-year term. So sort of like, if you go into an RSP and mutual funds and whatever the case may be, you break it, then there's a penalty. And in this particular instance, you have to remember that this is an individualized private loan between yourself and this borrower, and so it's something where they signed up for a 5-year term. So that's the expectations, that it's a 5-year term. We will not guarantee, but best efforts would be made to if you needed to get out earlier for some reason, best efforts can be made without the guarantee of it, and and then there would be the penalty. It would be a 3-month interest penalty plus legal fees, because of course there's legal fees in doing the mortgages, and getting those done. So, but if, let's just say it happened inside of the first year, and something crazy happened, you're like, my God, I need my money out, and something happened. Well, if we were able to replace those funds, let's just say it happened 8 months in, but you've already received 12 months worth of payments up front because you were paid up front for the first year, then you would naturally have to return the difference of the pay period plus the 90-day the 90-day penalty, and you can keep the rest, and that's it. So that's how it works.
Yeah, generally, I just want to say that we're conscious that if something does come up, we'll use our best efforts, in order to replace your loan. It's not a guarantee, but it's something that we can definitely work towards. There's a question there: if something happened to the investor, would the investment be transferred to a beneficiary? Yeah, it all would depend on your will and then your estate, right? I mean, because essentially, you as the investor own the asset. You own that mortgage charge on that property. Nothing to do with me at that point.
Yeah. So, so the steps to get started: first, you'd fill out the KYC form. That's to know your customer. So that makes certain that, yes, you know exactly what you're participating in. And I have to say that this is far more transparent than when people invest in, I'm not knocking other instruments, but than a mutual fund. And, it's one of those things where precisely what you're investing in, because you're actually going to see all of the a bunch of more.
Hey, keep it down.
Sorry? Oh, so you're actually going to see a list of the mortgages.
I did not keep it. My kids are making a lot of noise in the back, so I forgot to mute myself as I screamed at them. My bad.
All right. So again, review the list. So you're going to get a list of mortgages. Mike, why don't you explain how that process works?
Sure. So, first things first is, like you said, fill out the KYC form. That's just more for compliance. We set up a one-on-one call. I go over any kind of specific questions you may have. And then once you have a firm grip and understanding of what it is that we do, and you'd like to, to contemplate moving ahead, I would then send you a list of mortgages that we have available in current inventory. At any point in time, we hold anywhere from $500,000 to $1.5 million or so in mortgages in terms of inventory, and you would essentially choose from a list saying, okay, I like these ones. I'll take number 1, 12, and 18, for instance, off the list, and so on. Right. Once you've done that, I would then engage with your lawyer, and what happens is that my corporate lawyer with your lawyer, they essentially interact in order to effectuate the transaction. Right. Typically, what happens is prior to that, I get on the call with your lawyer, answer any questions, make sure that they understand this. And we've done this now a number of times, and I've dealt with with a bunch of lawyers, so I kind of know what they're looking for, what they're asking, and I'm able to field most of their questions. And for anything else that they want further, I connect with my corporate lawyer, and they just proceed. Great question. There was a question there about who pays for the legal fees. So because this is an attorney to attorney transaction, I must pay for my corporate lawyer, and then you must pay for your own lawyer representation, right? That is also why there is a minimum of about $100,000, because we don't want the legal fee to cut into the yield and the profit too much, right? And it doesn't make sense to do this on, say, one single $20,000 loan, for instance, right? Because it just wouldn't make sense for the investment. That's why there is a minimum, and each one absorbs their own legal cost. Typically, what it works out to be. So no, there are no other fees involved, for the investor other than legals. Lost my train of thought there. The average per transfer has been about anywhere from $300 to $400 per mortgage charge. So if someone's transferring, a package of say 10, they're probably going to pay $3,000 to $4,000 or so in legal fees. That's generally what I've seen.
Yes. Mm-hmm. So. And we're going to take more questions, and I guess I don't know if they're able to unmute and everything like that, but this is for those of you that are interested in having a further discussion regarding your situation and what you'd like to see done, and answer any other further questions. Please shoot me a quick text right now. And it's, again, my name is Noel Walrand. And so please include your first and last name, person who invited you, your email address, and the best time to call you. But really, the phone number is the best time to call you is better. I'm a telephone guy, so I'll give you a call and we can go over things. We can jump on a Zoom together one-on-one, and I'm happy to discuss your situation and discuss different options and plans and the like over and above that. So please, if you want to take that down again, 647-408-6635. Shoot me a text and I will get at you as soon as possible. And of course, this is my email address is noel@mydreamswork.com.
So, and Harry had a question there about the name of my company. It's Flex Home Loans. And that was at the beginning of the presentation as well.
Yes. So I am not, by the way, Richard was asking me if I can put this in the chat, but for whatever, I'm not being given that option, my friend. So I'm going to actually clear out. I want to actually stop sharing here. How do I do that now?
Yeah, you're not sharing it.
Am I sharing now or am I not sharing anymore?
No, you're not sharing.
Okay, so how do I get back over to you guys? There we go.
So what I would suggest is that, Noel, if you can actually join our WhatsApp group, so you can share your number there, and if anyone want to reach Noel, we can just send you a message on WhatsApp, I guess.
Mm-hmm.
Way to reach out to you.
Yeah, absolutely. Absolutely. Are there any other questions people have? You have my number there, right, Bryce or Rich? If you guys want to just add me into the group, that'd be great. And
that would be good. So that's good. And I guess there is no more questions. So I'll say thank you very much for all of that. Mike, you shared the name of your company, right? Or Can you write it in the chat? Yeah.
Sure. It's Flex Home Loans. Where's the chat here? I think, there we go.
Oh, and one other thing that's important to note is that this is not investing in a pool of funds or anything like that, which is something that's great. This is you as the investor go on title for each of the properties. So if something ever happened to Mike or his company, it doesn't matter. You have your paperwork that you can take to your lawyer to execute to go in. Your funds there. So you are on title for each of these properties. There is no pooling, no syndication, none of that. They're all specific loans. You know exactly who the person is, and you have all their information as the lender. And so and another thing too, because some people ask, are there hidden things? One of the beautiful things about real estate is something called disclosure, and so every single thing that is done, anything that is charged to customers, everything, you will see everything. You see all the numbers. There's nothing hidden because of disclosure. So you see everything. And I like it. It's very simple, very clean. You know what you're investing in. And frankly, I don't think in terms of getting secured returns with this level of security, you'll be hard pressed to find anywhere else where you're going to get these types of returns secured. So I think that is one of the most powerful. That's why when Mike contacted me and he said, "Yo, I have this project I'm doing, and it is something that would be of interest," and I was absolutely thoroughly excited about that possibility, and I'm absolutely excited about that, and I'm look forward to connecting with people to talk about it. And the last thing I would just say, first of all, it is beautiful to see our community coming together in this type of forum. When I came on the screen, I didn't realize the meeting had started earlier because I would have jumped in to hear a little bit about the Forex. I'm learning how to trade Forex. And one thing I'll just say is that brothers and sisters, if there is one skill you want to learn, it's learning how to trade. I don't care if it's Forex, if it's options, in this economy, the new world economy that we're heading into, we're headed towards some very interesting times, and unprecedented, and where the greatest shift of wealth is taking place that you've ever seen. And I was a person who used to be intimidated by the idea of learning how to trade, because numbers and in high school, graphs and charts and all that kind of stuff used to freak me out. I used to shut down when I used to see them. You know what I mean? It used to really intimidate me. And once I joined with an academy to start to learn, I saw that it's not that difficult. In fact, my mom and I actually are learning at the same time. And I told all my siblings, if you're not going to do it, put your kids on it. Get them off video games and get them on. If they can learn how to learn how to play video games, they can learn how to trade. And and it doesn't take long to learn how to do it. But if you want true freedom, and all the banks, this is what they do: Forex, foreign exchange trading. If you really want to learn that. Also, feel free to reach out to me. I can connect with some of my people, or the gentleman Bryce, who was doing the presentation. Because if you trade, I'd love to learn more about what you're up to too, brother. I'd love to understand what you're up to and what you're doing. But if you want to pick up a new skill going into this next year, trading. Learn how to trade. Understand what's going on around you in the global markets. For those people who may not have been exposed to it, I just wanted to encourage that.
All right, thank you very much. It was really, really interesting, and
Thanks for having me, guys. Appreciate it.
Yes, thank you, family. Really appreciate it. Bless. And Richard, if you want to call me, I'll mute myself over here, and you'll walk me through with the PowerPoint presentation thing, which you were asking me to do. Okay. So thank you very much, family. Bless.
Yeah, thanks. I'm gonna share everything tomorrow or probably this week, so it's gonna be accessible on YouTube. So thank you, guys.
Okay. Thank you.
Yeah, thanks. All right. Have a good evening, everyone.
Yeah.
Bye.
Bye-bye.